I think the biggest myth is just trusts are complicated. Trusts don't need to be complicated, and anybody with any level of wealth could establish a trust.
Hi there, and welcome back to the Trust Exchange podcast series, proudly presented by Norway Savings Asset Management Group. We're going to go around the table and say hello to everyone. First of all, with Barbara.
Hi, I'm Barbara Kopp. I am a relationship manager and trust officer with AMG. I have been with AMG for 1 year now, but I have over 20 years of wealth management experience.
Hi, I'm Rachael Billings. I'm Senior Trust Officer and Relationship Manager here at the Asset Management Group. I have been with Norway Savings for just about 2.5 years, and I've been in banking and trust services for just over 20 years.
I'm Kurt Garascia. I'm a senior portfolio manager for the Asset Management Group, and I've been with Norway for over 20 years as well.
Great to have everybody here, and great topic here on this episode. Trusts are not just for the Rockefellers. We know that. We're going to debunk that really fast. So what are the biggest myths and misnomers about this being only for the Rockefellers or the Vanderbilts or whomever else?
I think the biggest myth is just trusts are complicated. Trusts don't need to be complicated, and anybody with any level of wealth could establish a trust. Like you said, it's not necessarily for the people with billions and billions of dollars. We work with clients all the time who have maybe a couple $100,000, and they're thinking about what happens to that money when they pass away, and they want to find a plan for how their money flows out upon their passing. So that's really, I think, one of the primary reasons that people of any age and wealth range could use a trust.
Well, I grew up on MDI. That's the home of the Rockefellers. Oh. But I am no Rockefeller. But I have set up a trust through my will, and I think anybody that has any means that they want to protect their children can set up a trust. And mine will be funded upon my death so that my kids don't get a lot of money at once. Not a lot, a little bit of money at once.
I think that was really well said by both of you. And one of the things that I love is being able to serve a family and protect a family from some of the outcomes that can cause problems.
And the advantage of you being a fiduciary. What are the advantages there in terms of, setting up a trust?
So Norway Savings serves as corporate trustee if a client needs us to. Sometimes a trust is set up where the individual will serve as a trustee during their lifetime. But beyond that, they want a plan B. So in that case, we can be named to be their plan B, and we would be named as the successor trustee, so that when the time does come, we can execute, we can follow the terms of the trust and pay out to the beneficiaries, whether it's their kids, their grandkids, charitable interests. So every trust is different. When you're working with somebody like Norway Savings and we're a trustee, we're going to really take a deep dive to understand the terms of the trust. So it's a bit different from if you maybe name your brother to serve as a successor trustee. Your brother might not be as well versed in trusts and how to administer those. So that's where we really step up, and we can understand a trust a bit more than perhaps a family member could.
And really, a trust can really be, we're talking about this being misunderstood, Barbara, but it's one of the most flexible planning tools out there, isn't it?
It really is. It can be customized to each individual, and with the help of your attorney, you can have a trust drafted to meet your needs.
Can you expand upon that as well, too, Kurt, with this being as flexible as just about any other financial tool out there?
Sure. So one of the things that I think of is, to the example that Rachael just used, a lot of times we will be partners with a family where there will be a family member that is related to a trust and involved in some way, but that we can really serve in with some of the more complex, sometimes tedious, but also pretty important tasks, things like filing a trust tax return, getting that filed with the CPA. things like making sure that the trust is invested in a way that is diversified, follows all of the rules around prudent investing, things like that. It's a lot for some people to handle. A lot of family members would not mind supporting a trust, but might be very intimidated by the responsibility. What if I make a mistake? What if I do something wrong? Having a partner can really take a lot of the risks off the table.
And trusts certainly have a wide variety of uses, do they not? I mean, you go for insurance policies, charitable funds. So what if you could just talk about this being, expanding upon its flexibility and having a wide variety of use in those capacities, I guess.
Well, if you have a child that has special needs, you can open a trust to support them through their lifetime.
Yeah, and special needs trusts are becoming increasingly popular. I think not because of the increase in the population with disabilities, but just the fact that there are public resources available to individuals with disabilities. And these trusts are structured very specifically so that it does not jeopardize their public benefits. So they'll continue to receive Social Security and in main care benefits for healthcare, which are very important programs. So those special needs trusts that Barbara referenced are extremely important in terms of ensuring that the beneficiary still receives the benefits, and that we can, as trustee of the special needs trust or supplemental needs trust, we can help supplement their income. So very specific type of trust that I find is increasing in popularity. In addition to a traditional family type trust where you really are just structuring it so that perhaps you want a certain dollar amount to go to your beneficiaries either monthly or quarterly, or you want to set up broad provisions which essentially would allow for just comfortable support of your loved ones when you're no longer around, whether it be your spouse or your kids or your grandkids.
So, Kurt, what are some of those risks for people who are not in the know, per se, that you spoke of?
Sure. Sometimes people that are very competent professionally, very ethical people, don't have experience with a trust. And so if leaving something as important as being a trustee to someone like that doesn't have a lot of experience in that area and might not know where to look for support, they might not know how to have an account invested. They might not know some of the questions to ask. And so we have seen sometimes trusts come to us that are they were drafted with very good intentions, and maybe an attorney did a good job, but that they didn't leave the person with a lot of support. And so sometimes that person or that family might have left the money in a near riskless security. And that might sound very wise, right? Who wants to take a lot of risk with investments? Well, if you've left money invested for 20 years in things like treasury bills, you've earned a return something like 3 or 4%. Whereas if you had invested those funds, you might have earned a return in the 7s, 8s, 9%. It's been a very strong investment market the last several years. The difference is extreme, when compounded over a 20-year period. It can often mean the difference between a trust that is wasting, dropping in value, and a trust that is growing in value.
What is your advice to somebody that just wants to just kind of narrow this down to what they really need as a fiduciary?
Sure. My advice is to talk to someone like Barbara and Rachel. A lot of times I will be working with clients where I've got a good relationship with them, maybe managing IRA funds, managing the sale proceeds of a business, which we would call an investment management account. And so when sometimes we will start to hear some key triggers that will make us think, maybe a trust would help this family. The first step is just knowing who to ask. And we have people like that because we're a bank trust department.
Yeah, and as we work with our clients, we're learning more and more about them. So we are going to find out if they have complex assets, if they are business owners or have some, non-publicly traded stock in a business or something more complex. And so then when we make a referral to an attorney, we can explain that this is a very complex relationship. They're really going to be taking the deep dive to determine what type of trust is really best for that client. It's really just customizable for whatever the client needs and what they're hoping to do with their money.
So, Barbara, what are some of the biggest pitfalls we can look for right now?
You really want to deal with an attorney. Don't go online and do a template of a trust and fill it in yourself. That will not meet your needs.
And also an attorney that is experienced with estate planning. There are attorneys who might specialize in different areas, right? And so an estate planning attorney is really going to understand wills and trusts and make sure that the document is drafted properly.
So, in here and now, we know that AI rules the world. So, what about AI? How are we kind of avoiding AI and getting back and talking to live human beings as we're doing right now?
I'll tell you, with something as important as a family's life savings and trying to protect those resources for generations to come, I would be very hesitant to rely on an exclusively online resource for something of that importance. I'd want to use experienced individuals like the ones in this room.
Yeah, AI, I think, is a great tool to double check information, but not necessarily help draft up any legal documents. I think that's a slippery slope. At this time, at least. We'll see what the future holds.
But do people come in, Barbara, and say, yeah, but AI says...
AI really is not the tool to use here. You want to talk to your attorney. You want us to review it. AI may know some things, but it's not what you want here.
We've been talking about, people who say, well, it's too late. I missed the boat. You really haven't, or I'm too young, or your family situation, we're just starting a family. I just, retired from the military or what have you. So there's no right or wrong age for this. I mean, this is all, different, arbitrary for different people and people with different financial structures. Is that correct?
Correct. It's never too late. It's really never too late. A lot of times somebody will draft a trust maybe in their 50s and they decide if it's a revocable trust, then they can make changes to that trust 10 years down the road if they need to. And then 10 years later, they can make changes. So I would say it's never too late. If you feel that it's an important part of your estate plan, then either bring it up to us as your advisors or talk with your estate planning attorney, and they will certainly help you out.
One thing that I'd throw into that conversation that I've seen with some of the larger client families that we work with, sometimes two spouses will not have perfectly aligned views on what should happen to our resources when we're gone. And so that in itself can cause a delay. That, I would say, is better to work out in conversation sooner rather than later, and not just sort of let that wait. What I would think is, let's get something in place that's protective, that's better than nothing, because almost anything you put in place is going to be better than nothing. And then we can make those changes exactly as Rachel was just saying.
Do people come in intimidated, Barbara? Are they just completely just overwhelmed with all this? I mean, your job as a fiduciary is to have their best interest, but they just, come in not knowing much about this. Are they overwhelmed with all this information, overload?
They are. They come in and they don't know where to begin. Mm-hmm. And so I ask them what their goal is, and I said, really what you need to do is start with the attorney. The attorney will help you draft the trust, and then come back to us. We'll talk you through it, and we'll see if that is a great fit for you, and we'll work with the attorney if that's the case. And come to us with your questions. Like Rachel said, we can answer the questions. We don't charge by the hour, and we are a great resource to them.
And as we wrap things up, let's go around the table here and let's do the lightning round, if you will. What's one key takeaway that our viewers and our listeners need to know about this in summation here, Barbara?
We are here for them. We are a resource for them. Come to us with your questions and we'll help you out. If we don't know the answer, we'll direct you to the resource that you need.
Rachel?
My takeaway, really, the title of this podcast is that trusts aren't just for the Rockefellers, and that is so true. Trust can be used in so many different ways. So we're happy to talk about how a trust might benefit you and your family.
Work with a true partner. Work with a firm that wants to work with you. Work with a firm that you have no problem getting on the phone, that you feel like you can have a dialogue with, a conversation with. And that's exactly the kind of firm we want to be.
All right. Thanks, panel. Excellent job, as always. And this is fantastic. Great answers to these questions, and hence the aptly named Trust Exchange podcast series, proudly presented by Norway Savings Asset Management Group, AMG. We thank you for joining this podcast, and we'll see you on our next episode.